Let's begin with Apple. That revenue warning weighing on the major averages. Let's bring in our own John Fortt here on set to dissect exactly what we heard from Apple, John.
Well, we heard what a lot of people, I think, expected to hear 3 weeks ago when Apple reported earnings, which is more caution than they gave in the guidance. Remember, back 3 weeks ago, they guided to revenue between $63 and $67 billion for the quarter. Traditionally slower quarter for Apple, but, you know, with all of the mounting coronavirus headlines, COVID-19, perhaps we should call it at this point, people thought that it might be worse. It's about a couple $billion bigger range than usual. Well, now, due to the developments over the last 3 weeks, Apple's coming back and saying, okay, there's a two-pronged issue here. One is a supply chain issue. We have suppliers all over, but China is a nexus, and it's unclear when we're going to be able to get people back to work, and their safety is a primary concern. And then just on the demand side, people aren't going out and shopping, and therefore there's an issue with actually getting things like iPhones sold out there. Apple's saying we're going to give you another update when we next report earnings, which is at the end of April. So that's about 10 weeks from now. I think this tells us more probably about Apple's planning than it does about overall virus impact. Apple had a choice, I think, in earnings to either give a conservative guide or say we can't give guidance at all. They chose to give guidance. Now they're going back on that and saying, on second thought, due to the way this is progressing, we can't actually give a guide. So I think we have to be really careful, even about these analyst notes out now, downplaying the impact because this is a slower quarter for Apple. We just don't have great numbers yet about infections, about deaths. I was just thinking about China specifically. They're in the midst of their 5G network build out. And they were kind of going full steam ahead, trying to get 5G built out in all the major cities to lay the groundwork for then consumer 5G. Well, I don't know if they're going to be able to do that with so many workers inside, not out on the streets. If the 5G network build out is slowed down a bit, well, that means there's not as much of a market for 5G phones there. That could have downstream impacts on handset makers. But all of that, we're just going to have to wait and see until we get better.
Well, I guess the question is, and with that issue and the numbers and the supply and the demand, do we have a sense of whether this is just lost business or pushed out business?
A lot of people, again, are saying, well, this is pushed out business. But again, I'm skeptical because if you think about it, if you're at home, you were planning to go out and buy an iPhone because you had some disposable income. Now you can't go out, buy that income. In fact, you buy that phone. In fact, you might be furloughed. You might not know what your cash flow situation is, and you might have new costs to deal with this outbreak, friends, family who need money. Are you really going to go out and buy a premium phone now? Even when you go back to work, are you going to immediately do that, or are you going to wait till things are stable? I don't know. I don't know that we have precedent for this.
By that scenario, you're starting to bleed into what some say is a moat around this issue, and that's Apple's transition to services. You don't buy the phone, there are ancillary services on the margin, at least, that you might not use as well.
Absolutely. But we saw from Alibaba's earnings, they're saying actually this is, in the short term, a boon to e-commerce because people can get some business done digitally.
If the courier is working.
Yeah,
right.
If their delivery guys are actually working.
And actually, it's a bigger boon in a sense. Don't want to talk in those terms with an epidemic like this that is costing lives and threatening lives, but to JD.com because they control their supply chain. The issue with Alibaba is they rely on third parties to do deliveries. JD, more Amazon-like, has more control over its logistics network, so they're better able to plan in this type of situation. So for certain types of e-commerce, you even got to be more granular than that. Business in the short term isn't constrained as much. However, everybody's saying if the impact of this, just in terms of the spread of the disease, continues on beyond the short term, that's bad for everybody, e-commerce or not.
It's funny. Supply chain. I mean, that's where I think, well beyond Apple, I think there's a lot of focus right now. Who's coming back to work? How many people are? What is the capacity of the manufacturing that has returned or will return over the next few weeks? And we're already talking and hearing, I certainly am anecdotally, about supply chain disruptions. The question is, how much is there? How long will it go? Yeah,
and we got to go more than just company by company. You know, we're here at the stock exchange. We're constantly looking at data from analysts, from individual companies, and then overall from countries. We rely on good data to make decisions, and so do these companies. and we don't have it yet.
Right. Well, as Barry Diller made clear in his earnings call last week, by the way, John, Fitch is out right now saying that if the situation drags into March or April, the effect could be more disruptive for the U.S. tech sector. That seems like obvious on the face of it, but March is 11 days away. I'm not sure what kind of bar they're using to connote danger.
Yeah, and the numbers keep changing. You know, just last week, we had a change in the way infections are being counted. So on the one hand, people who are exhibiting symptoms, but maybe a test kit hadn't gone out to them, they're now counted as having the disease. But there was a report from our Eunice Yoon saying that people who had tested positive for the disease but weren't showing symptoms, well, they weren't counted in the number. But then you've got stories about people getting off of a boat when they weren't showing signs of the disease and then showing it later, concerns. So it's still, I feel like we thought 2 or 3 weeks ago we'd have a better sense by now of what the real numbers were, and yet the numbers are still changing.
On the stock, John, I mean, to your point about why Wall Street is sort of taking it in stride, a 2% down move for Apple, the stock that has rallied, more than 100% over the last 12 to 14 months, is a blip.
Yeah. And I think I was also looking at Tesla. It's been a few minutes, so who knows where the stock is now. But last I was looking at Tesla, it was up 6%, which tells you something about market sentiment for risk overall, just general bullishness. Despite this, there it is, up about 7%. They've got a lot of their growth staked in China, but investors this morning are not worried about that. Should you believe what investors, based on what investors are doing on one particular morning? I think we know the answer to that. But it's been a long bull market, and a lot of people are betting it'll continue despite this.
China added more stimulus, too, over the weekend.